Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX Global, bringing you the morning comment for the 24th of February. Iran is out, oil prices plunge. Iran's oil minister described the Saudi-Russian oil freeze proposal as ridiculous yesterday. He said that should Iran's oil production fall, it will be overtaken considerably by neighboring producers. Oil prices tumbled immediately on his comments and fell even further a few hours later after Saudi Arabia's oil minister stated that production cuts will not happen. We believe that we would need to see some control over the supply side of the market before oil prices begin to stabilize. But for this to happen, more negotiations are needed. Perhaps an emergency OPEC meeting, as the next scheduled one is in June. Nevertheless, as this is unlikely to happen anytime soon, we expect oil prices to continue falling, given that Iran wants to boost its output further. In the long run, though, persistent low oil prices could force some producers to exit the market, as it would be unsustainable to continue producing below cost. In such case, the supply side would balance itself. The question now is how low oil prices would need to go and for how long they will need to stay there until this happens. In the UK, Bank of England Governor Carney said in his testimony that the pound's fall reflects a referendum premium investors have priced in due to the risk of a possible leave scenario in June. When asked about the potential referendum outcomes, Carney said that the Bank of England is making contingency plans and that it could ease policy further if needed. His comments added to the selling pressure in cable, which reached levels last seen in 2009. The pound could continue collapsing in the following days if incoming Brexit polls, like the one from YouGov yesterday, show that more Britons want to leave the EU. Overnight, Fed Vice-Chair Fischer said that it is too early to assess the impact of the global volatility on the US economy and that recent episodes of similar turmoil did not leave a mark on the US. He also said that the Fed has no plans to use negative rates, although this is under study. Compared with his latest remarks, this time he appeared slightly more confident over the health of the US economy. This may be a byproduct of a sharp rise in January's inflation or signs that domestic spending remains healthy despite the recent global uncertainty. We still expect that the Fed will stay on hold in the foreseeable future, but if we see the global situation to stabilize, the market may increase speculation for more than one rate hikes in 2016. As for today, during the European day, Norway's unemployment rate for December is expected to have remained unchanged. The official unemployment rate for the same month increased, and therefore we see the possibility for a rise in the print as well. Nevertheless, we will treat the data as outdated since January's official unemployment rate is already published. Therefore, we expect any reaction in the krone to be minimal. In the US, new home sales for January are expected to have declined somewhat after a surge in December. Housing starts and building permits, which are considered forward-looking indicators of new home sales, have both declined in the past couple of months, which supports the case for a slide in the new sales print. However, given the sharp rise in December, a minor decline in January does not seem that harmful to us. The preliminary market service sector PMI for February is expected to have increased to 53.5 after a dive to 53.2 in January, its lowest level in over 2 years. Despite the subdued manufacturing data, the service sector appears healthy, and this could support the dollar, at least at the release. We have 3 speakers today: ECB Governing Council member Jens Wittmann, Richmond Fed President Jeffrey Laker, and Dallas Fed President Robert Kaplan. For more information, including technical analysis, please read the full comment on IronFX.com or download our app to get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX Global, wishing you solid trading.